The Federal Reserve keeping rates steady Wednesday as expected as the major market indexes dropped more than 1%. For more on the Fed, a little bit of GameStop, and a look at the potential for emerging market equities, we're joined by Danilo Kawasaki, COO of Gerber Kawasaki in Santa Monica, California. Welcome to our program, Danilo.
Yeah, thank you.
Well, Danilo, as expected, no change to bond purchases in terms of the Fed schedule. The Fed also potentially flagged the potential slowing in the pace of the recovery. Were there any surprises in the statement for you?
No, no surprises at all. We're seeing the consequences of the second wave of COVID, and numbers in December weren't all that great. And it's not a surprise that the Fed is leaving rates unchanged and will continue with its bond buying program.
And okay for them to keep fending off any suggestions of a potential surge in inflation for now?
Absolutely. I don't think they have a choice. And one of our biggest concerns here in the short to medium term is inflation. We think that there's a lot of pent-up demand, and as things start to reopen again and more stimulus is thrown into the economy, we are concerned about the consequences of that. So keeping rates at bay and maintaining the bond purchase programs are obviously great for the markets.
And then let's go to GameStop. The stock is up. It's doubled today. It's up nearly 8 times in just 2 weeks. And then you got AMC, which is tripling intraday today. What is this frenzy trading, this battle between retail investors and hedge funds? What does this tell you about the health of today's equity market?
We had a lively debate internally here this morning, and I'm a little torn about this because on one side, I think that this it impacts the integrity of the market, and we need confidence from investors to maintain an orderly market. But on the other side, my colleagues here are saying that this is an opportunity for the small guy, for the little guy to kind of stick to the big guys. And we're dealing with a dynamic that we never had to deal with before, which is the power of social media. And through social media, this is, through Reddit, these people are gaining a power by joining forces, basically, and pushing the hands of, the shorts and in names like GameStop and AMC and BlackBerry and all that. So I'm a little torn. I have to say, as a more conservative person, I think that regulators need to step in and figure out how to regulate this a little better. Ganging up on a short squeeze to make a quick profit, it's not really what capital markets are for.
And Danilo, I understand you're really bullish about the prospects for emerging markets this year. Why so?
I think this is the year that emerging markets may actually, outperform developed markets. The IMF's projection for GDP growth for emerging markets this year is 6% versus 3% developed markets. And I think there are basically 3 forces helping emerging markets. Number one is, we have a new administration that is going to be more diplomatic in dealing with foreign affairs. Number 2 is this advancement of technology, a lot of it being pushed by COVID. Emerging markets are always kind of late to the cycle, and because of COVID, they have been kind of forced to adapt and adopt new technologies. And then thirdly is the weakness of the dollar, which obviously helps foreign currencies, and it helps a lot of the emerging market countries because a lot of their debt is in dollar-denominated debt. So a weak dollar helps them pay off this debt or control the payment of this debt a little more easily.
And Danilo, lastly, among your top picks, I understand, is Mercado Libre, which happens to be in your native country of Brazil, this online marketplace. I was looking at check the stock. It's more than doubled over the last 12 months. It's up 7% this year already. So why do you think there's more room to run in this stock?
Yes. I wish I was here 9 months ago when we were recommending the stock to our clients. But, Mercado Libre is a combination of an Amazon, Shopify, and PayPal all in one place. There's tremendous growth opportunities because, first of all, only 5% of purchases in Latin America are done online. So we have tremendous growth opportunity there. Out of the purchases done online, the bulk of the purchases are done directly through the manufacturer. So we have an opportunity to grow the marketplace for Mercado Libre to become the go-to platform for online purchases. So I think those two combined make Mercado Libre a very attractive investment over the medium to long term.
I'll have to leave it at that. Thanks a lot, Danilo, for your thoughts.
Thank you, Fred.
Our thanks to Danilo Kawasaki of Gerber Kawasaki in Santa Monica. I'm Fred Katayama in New York. This is Reuters.